Good afternoon and welcome to our second webisode for commonmaninvestor.com. We are talking about shorting is not a dirty word. What it means to short sell a stock. Now, a lot of people think that this might be a derogatory term or hope that companies go down by short selling. I don't ever feel that way, actually. I don't want stocks to go down. I don't want them to do poorly. All I'm saying is that I think they are doing poorly and their stock's going to reflect that. Now, when you're long a stock, you are buying it hoping that it goes up. When you're short a stock, you are literally selling it at one price, planning on it going down so that you can buy it again later at a lower price. You are buying to cover at that point. Now, you're borrowing shares technically because when you're selling it, you have to sell something, and you're not buying the stock outright. So what you're doing is you're borrowing shares from somebody who's already purchased those shares on margin. So what you're doing is you are borrowing and you are shorting the stock, selling short, hoping that it goes down, you pick it up at a lower price. Now, when you short stocks, in theory, there's an unlimited risk. You need to know this because there are risks involved with everything. If you buy a stock and it goes to zero, you lose all your equity. If you short a stock and it triples, you can lose 3 times your investment. For example, if you sold short on a $100 stock and that thing goes to $300, not only did you lose that $100 investment, you lose $300. Next, you can also short stocks by buying put options. Put options are a way to limit your risk. You can buy something thinking it's going down, and those puts increase in value as the stock goes down to that strike price that you purchased on. I don't want to get too much into options, but I just want that to be in your mental Rolodex. Now, here's another thing, is that when you want to sell short on a stock, you can only borrow as many shares as are available. For example, if I'm using E-Trade and I want to short 100 shares of First Solar. Well, E-Trade may not have 100 shares to borrow for me. There may be so many short sellers out there that they've already sold short on those stocks, and I can't borrow any more against it. And you can only borrow as many as people have purchased on margin. Remember, on margin, when you buy something, like let's say you have $100 in your account and you want to buy $200 worth of shares, you're borrowing that extra 100 on margin. So that extra 100 I could borrow from them. Next, interest is charged because you are borrowing, remember this. So it is the same as if you were to buy that $200 worth of shares with $100 worth of equity. That extra $100, you're actually borrowing it on margin, which has a minute interest rate on it. But you need to be aware of these things, so you don't want to hold on to it forever because you're being charged to hold on to those. When you're doing that, you generally don't want to hold through the dividend payout period, because if you're holding it short through that period, you actually have to pay that dividend, the dividend on the number of shares that you have. So your equity in those shares will decrease by the 3% in dividend that you're paying out. Just something to understand. Now, let's say this thing goes and hits our target or not. Either way, at some point you're going to want to buy back those shares. Remember, we sold it at one point. We were hoping for this point, but regardless, whether it went up or down, you're going to have to purchase those shares back. And that's called buying to cover. Okay. And next and final, not always will you be able to short a stock. And I kind of touched on this earlier, but I want to reiterate. If I were to say, hey, I'm going short such and such a stock, there may only be a certain amount available, and every brokerage firm has its own number that they're going to have available, because E-Trade will only allow what they have that people have borrowed on margin. Scottrade the same, and so on and so on. Every brokerage company will have a different amount. There's not a whole number out there that you can always say, hey, I want to borrow from. Because every company is different. Every brokerage company is different because they're making individual loans on those stocks when they sell on margin. That's it. Remember, shorting's not a dirty word. We don't hope that the world goes down. We're just thinking, hey, it might go down. We want to protect ourselves. We want to purchase some shares as they're going down. Again, I don't hope that stocks go down, but I might as well take advantage of it as it does. Otherwise, This is Common Man Investor signing out. I hope you learned a little something here, and hope you have a great day. Thank you very much. Bye-bye.